Hey there, Investorholics. Welcome to the ETF Spotlight Review. Today we will be taking a look at AGVT, which is the BetaShares Australian Government Bond ETF. This one might be of interest if you're looking for some portfolio diversification. Pays a monthly dividend, so if you're looking for income, it might be something worth taking a closer look at. And this one's made up of high quality Australian government bonds, so AAA. So that's a tick in the box. Hang around, guys. I think this one will be very interesting. Hey there, Investorholics. It's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, so AGVT aims to track the performance of the index and provide exposure to your portfolio of high quality Australian bonds issued by Australian federal and state governments and other supranationals or sovereign agencies. The fund strategy is to invest primarily in a portfolio of relatively long duration Australian government bonds. Eligible bonds must be Australian domiciled fixed rate bonds and have a term of maturity between 7 and 12 years. 75% of the portfolio weight is allocated to bonds issued by the Australian federal and state governments. 25% of the total portfolio weighting is allocated to bonds issued by supranational agencies or organisations, Australian foreign government agencies, and other similar issuers. Why we look at this one? Superior quality, credit quality. Australian government bonds have a high credit rating in the Australian bond market. We're also looking for a bit of diversification, and also bonds can be defensive time to time. So government bonds historically have tended to rise in periods of significant equity market weakness. So that's possibly what we're going into now, but also having said that, you need to take into account rising interest rates, which also can be a drag on bond performance. As I sort of touched on before, we're looking for regular income. So this one's paid monthly. So AGVT focuses on long duration bonds, meaning income potential is typically higher than other Australian government bond funds. And, you know, yeah, it kind of depends on what you want to focus on, but, you know, looking for good returns is always the way to go. Okie dokie, so at the time of researching and recording, we had a net asset value of $47.53, trading just above that at $47.60. Market cap's not too bad for this one, is $282 million. Reasonable management fee at 0.22%. As mentioned a couple of times there, you get a monthly dividend, and dividend yield at the moment is about 1.14%. I mean, which isn't shooting the lights out, but there you go. So bonds are useful for investors seeking to preserve the value of their initial investment, as they typically have lower risk and volatility than stocks. Bonds produce income for investors who may need to rely on their investments to generate cash flow to live. So, got to touch that before. So bonds are typically, returns on the bonds are typically much lower than stocks and other asset types. I mean, kind of, it's more the safety, you know, your principal is typically not eroded anyway, but just depends on the market cycles and that type of stuff. So bond ETFs, you can buy and sell like shares, any other ETF on the ASX or wherever they're listed. So bond ETFs typically have a lower fee than bond mutual funds. So that's something to keep in mind if you're looking or trying to weigh up, do you go into a mutual fund, or do you just buy an ETF on the exchange? Also have a look at AGVT and IAF. As always, we want to continue our research. So we want to make sure we're putting our money in the right place. So we're always continuing our research. Okay, so there's the top 10. It's all pretty vanilla bland type of stuff. 5-year performance, 3.5%, inception date, so it's been running since July 2019. 3-year performance isn't that great, so you're only looking at 2%, and if you bought in the last year or less, you've definitely, you've had your capital eroded, I should say. That's probably a better way of looking at it. So individuals can use bonds for long-term planning, preserving principal saving, maximizing income, managing interest rate risk, and diversifying portfolios. Bonds provide a practical stream of income, and they're full per value held to maturity, as long as they're held to maturity, I should say. Yeah, so I think as diversification type of play, having a few bonds in your portfolio might not be a bad thing. So I think this one you probably need to dig into it a bit further and just go through and double check how highly rated some of these bonds are. So you want safety wise, you want AAA type stuff, so that'd be worth having a quick look at to see if they're AAA rated bonds or not. But I think this one's not a bad one. Say, if you're looking for monthly income, I think that's a big tick, because if you're going to invest your money somewhere, you definitely want to, at such a low capital appreciation anyway, you definitely want some money coming back in, and pretty much 99% of the returns on these things are actually going to be your dividend or income that the bond pays. So your principal isn't going to increase too much. It's really just capital preservation. Anyway, guys, I hope that was valuable. Yeah, give us a like, give us a thumbs up, all that type of stuff. Definitely helps with the YouTube algorithm, and I'll catch you guys at the next one. Ciao. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky Value Investing will be giving you up-to-date investing news and content, so you can navigate the markets wherever you are, expand your financial horizon, and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe, greatly appreciated. Thank you.